lack of a better word, is good. Greed is right. Greed works.
Hello everyone and welcome to episode 71 of Let's Play Wall Street Raider. I'm RakeM, your host. Last time out we had a little upswing. We played a couple of months worth of game time, and in that time basically what we've been doing is preparing for the losses that we're going to experience as part of this crash, this GDP growth crash and the increase in the prime rate, by selling off all of our passive investments and reducing our market share for companies in industries where they had a large market share and the competitors were going broke. So we got through all the emergency situations, and we still have some more to do. They're not really, I wouldn't consider them emergencies, but they do have big market shares, and so we need to go check on them. I have not updated my spreadsheet between the last episode and this one. I'm playing these back to back. We didn't do a lot of fast forwarding last time, so I'm just going to keep going. And we're going to start with buying a gold, because the price has fallen below $1,000. And if silver gets above 17, we'll sell off what we have of it. All right, so let me fast forward real quick while I buy gold, and I'll be right back. Well, we got a few transactions in. We bought gold for all of these guys and sold off their silver, but the price of silver has dropped now below 15. And gold has gotten up to almost 1100, so we're going to stop there and go back to working our stocks. Now, since the rest of these are in no particular order in terms of priority, we're just going to start at the top and get rid of the passive investments, work our way down. And we will look as we go and with regard to whether or not we need to downsize. All right, so let's go to PBR. And here, the returns have basically turned to zero. Of course, we are spending a lot of money on R&D, and we're still only reasonably competent. However, we are bringing in 1% per quarter, and we have a ton of cash thanks to profits that we made on oil. So I think what we want to do here is we want to sell off all of our passive investments. And I think maybe we want to pick up a passive investment in Burlington Resources. So let's do that. All right, so we still have a ton of cash. Our dividend is at zero despite our positive cash flow. So let's increase our dividend here. Let's not go crazy. Let's make it 2%. And let's lower the R&D to 18%. We have 46.6% of the market, and nobody's going broke, so we should be fine since we have somebody up here with more than we do. And the only problem is that the returns here are going to go down because of this negative demand growth rate. But I think that's pretty much all we can do, really. We could disperse some excess cash, but we want to hang on to some of it to trade oil, so we will stop there. And the prime rate has gotten back up to 13%. So when we take care of this group, if it's still up there, let's go buy some more bonds. There aren't that many left to be had, but at this kind of a return, it's worth it. So let's go to Twitter. We have 42.5%. We're bringing in 2.5% in income per quarter. We don't really have any excess cash, and we have a huge dividend. The only companies going broke have less than 1%, so we don't need to downsize for that reason, but due to this negative demand growth rate, we do need to downsize to preserve our return. So let's grow at a negative 10%. Let's lower the dividend to 40 cents for a 2% dividend. Now we can afford more than that. Let's do 4%. So we'll make it 80 cents. All right, now we have investments in all these companies, and a lot of them are rated buy. The demand growth rate is worsening, so I don't know why we would buy them. Right? So, like, let's, for instance, take a look at Baidu. He's got negative cash flow. So let's sell off our stock of him. And let's see. Google, negative cash flow. Priceline, negative cash flow. Preview channel, or travel, I mean. He's the only one that's got positive. Where is he? Right here. He's got positive cash flow. But for the most part, they're all losing. So let's just go ahead and sell them all off because they're going down. We can't grow more negative than we are, and this is going to drive the returns down. So let's just sell it all off. Okay, now technically we have excess cash, but we gave him a 4% dividend, so and his return's pretty low and it's going to go down. So let's just leave it at that for now. He does not need to downsize. Let's go to Red Hat. He's got 45.6 and he's very capable. He's bringing in 3% per quarter, and he has excess cash. And we got one company here growing broke, but and these two down here too. But that's just 1% of the market, so we don't really need to downsize unless this gets a lot worse, but it should be improving. Right? So the only ones really that's making a good profit. Lotus is doing okay and Adobe is doing okay. Right, so we could buy Lotus and keep Adobe. Wow, is that all it's worth? Is Itochu in this industry also? What industry is Itochu in? Global communications? Why do we have that here? He's losing money anyhow. Let's get rid of it. Okay, so we can keep Adobe. And Lotus. Apparently we had 19% at one point, but we've gotten rid of it for some reason. He's losing money, so I guess maybe we don't want to buy him. Let's check Adobe, see if he's got positive cash flow. No, he's losing money too. All right, let's sell that one off also. He's got gold that he's making money on, but so we are getting a nice dividend. But he's losing money, so let's just get rid of it. All right. So we have a 4% dividend, lots of excess cash. And we're bringing in over 3% now. Let's jack up the dividend. Let's make it, what is it now, 4%? Let's double it. Let's make it 42 cents. Here's A&P. He was forced to close numerous stores due to asbestos lawsuits. And the key is going to be whether or not that's an ongoing thing or not. And seeing as how it doesn't say that he has ongoing costs related to it, I'm saying, or I'm certain that it is a one-time thing. So hopefully that will be over. All right, so Red Hat here. That's A&P. Red Hat. I don't think we need to downsize, at least not yet, because all these guys that are in trouble are super small. So we will not have to downsize him for now. All right, let's go to Toyota. Toyota is bringing in 3% per quarter. He has a lot of excess losses and a ton of excess cash. We are invested in a lot of companies here. 4 of them in our own industry passively. The only one that's positive is this one, and Honda is in big trouble. He is in big trouble. Losing all kinds of money. So we need to downsize here, and we need to downsize a lot. So let's get this one. And we need to give him roughly half of our assets. He doesn't have a swap or anything, but he's got large tax carryovers. All right, so let's buy him if we don't own him already, which we don't. So let's buy him and then give him half our assets. All right, so we've got 113 billion. So let's give him 55 billion. And that actually gives him a better return than it does us. Okay, so we can keep 19% of this one. So let's sell off these others. Now that leaves him with a lot of cash, more cash than he has in business assets. And we have a 7% dividend. We're bringing in 3% per quarter. So let's increase our dividend to 8%. So that'd be 58 cents roughly. Spending 6% on R&D. And let's see, growing at -10, and this -17 is really going to hurt us. Well, these are going to go down, these returns. This doesn't turn around anyway. And it's still falling, so what are you going to do? All right, Kmart. Well, that's up. That's nice. But this is terrible, and that's getting worse. So Kmart, the 44% share. He's making 3% per quarter, and he's very capable. Has excess cash. Right, so we're making money here, and it's basically going to stay the same for a while. So Walmart is growing, and he's listed as a strong buy, but these other two are in bad shape. Right, so as far as going broke, that's 2.5%, 3%. These others are in okay shape. So we don't want Dayton Hudson, but we do want to keep Walmart. Let's just make sure that Walmart's income is positive. And it is, so we'll hang on to him. But let's get rid of these other two. So we just picked up Ecolab. He's in chemicals. So we'll have to look at him here in a minute. Alright, so we've got Walmart. We don't have Dayton. We have an 8% dividend, which is fine given as much cash as we have. And we don't need to downsize, so he's done. Alright, let's go to the bank real quick. Let's put some of this cash into mortgages. Alright, so Ecolab, we need to get rid of it right away. It's losing money, and it's making us too close to a monopoly. And we'll have Lubrizol sell it off too. Alright, so let's go over to Rolls-Royce Aero. Here we have some investments, but the returns are actually pretty good, right? And with him being, of course, he might go broke, but he's only 1%, so all these right here might go broke. But the returns are okay though. So I guess UTX is the one we want to keep, and we want to get rid of the rest. Okay, we're bringing in almost 4% per quarter. We have 47.5%. We're very capable, and we have a ton of excess cash. So let's increase our dividend to 8%, which would be $1.60. $1.52 if you want to be exact. Don't think we need to downsize here, since he has a larger percentage than we do. So we'll just stick with that. right, let's go to Juniper Networks. He's bringing in 2% per quarter. He's very capable and has 43.5%. He's got lots of excess cash and 2 passive investments. Now this is this is network and telecom, and the returns here have gone from good to bad almost overnight. So we need to increase our downsizing. We need to downsize at a negative 10%. And basically we need to sell off all of our passive investments here. And we'll look at the dividend when we get done with that. Okay, we're very capable, so let's lower the R&D to 6%. Okay, so he's going broke, but he's only 1%, and we are not the largest market share. So as far as dividend goes, that's more than 2% per quarter, and we have excess cash. So let's give him at least a 4% dividend. And we already have 6. So we need 25 billion. So I guess we can go 8% on this one too, which would be what, $1.76? All right, IBM's bringing in 1% per quarter, has 37% of the market share, is very capable, has way too much cash, and we have only minor factors going broke here. But the industry is worsening, so we want to sell off all of our passive investments. And that's the only one we have. Let's get rid of it. Alright, so we can afford 2% based on that, and so let's make his dividend 6%. So let's jump this up to 66 cents. Okay, are we very capable? We are. So that's it for him. Let's go to NVIDIA. Bringing in just shy of 4% per quarter. Very capable, lots of excess cash, and a dividend of 6%. Alright, so we need to get rid of any investment in Next Semiconductor. We can hang on to HeartMax and get rid of the rest. So we don't have HeartMax, so let's just sell the rest of these off. What is HeartMax selling at? 65%. All right, let's buy 19% of him. He's got positive cash flow. And now some of our passive investments are going broke, so we're taking losses. All right, let's see. Still have excess cash. We're bringing in 4% per quarter. Let's make our dividend 8%, which would be $2.12. As far as the market share goes, this is going to be getting worse. But I don't really think we need to downsize just yet. If next semiconductor starts to go broke, we'll have to. It just depends on how long this crash is going to last, but I'm going to hold off for right now. All right, let's go look at Hewlett Packard. I think we just did look at him. He has no stocks or bonds, just a ton of cash. He's very capable and has 43%. He's bringing in almost 5% per quarter in income. And just this one is going broke. So -10 fine, 6 is fine. And we want to jump this up to 8%. Let's give him a dividend of $1.60. And with no passive investments, that's all we need to do. That brings us to Hoffman LaRoche. He's bringing in 4% per quarter. It's 42% and is very capable. And has excess cash to the tune of $9 billion. Except that we have a loan, which is going to dig into our excess cash. Now we've only got $3 billion excess. $2 billion if you take off the taxes we owe. Right, so -10, that's fine. 6% is fine. 2% on the dividend. We're bringing in way more than that. So let's jump up the dividend. Let's make it 60 cents. Right, we're bringing in plenty to cover that without even dipping into our excess cash. So let's see what we have for passive investments. Got a whole bunch of them. Okay, so we want to keep Sanofi Aventis, and we want to keep GlaxoSmithKline, but the rest are negative. So let's sell all but those two off. Alright, so for the dividend, we now have $10 billion in excess cash, and we're bringing in 4%. So that's dropped. So let's get it back up to 8%. Let's make our dividend 80 cents. All right. Are we still very capable? Yep. All right, so he's done. And we paid off our debt and everything, so. Wow. So silver's still being stubborn, and gold is up, but has kind of flattened out. I didn't notice it go up to 1400. Silver's still doing its thing, but it's not staying up for very long. When it gets up to a sale price, it turns right back around very quickly. All right, let's see. Let's go to Fortis. Here we're making 1% per quarter. We're very capable. We have a 38% market share, ton of cash, and no real reason to keep it. Let's disperse 168 billion here. Now we're bringing in 2% per quarter. We still have excess cash. And these two are going broke, which is only 7%, but we are not the top dog, so we can just stick with what we have here. As far as passive investments, Morgan Stanley seems to be the only one making a profit, really. So let's check out these other two. Edwards AG, losing money. E-Trade, also losing money. Right, so he's making money right now. What's it going to be in the future? Okay, should be about the same. Unless this gets worse. And it could. But we're going to hold off right now. We'll just take our dividends and hope for the best. If it gets worse, we'll switch it up. You know, we'll check this again at the beginning of the next episode. We already have an 8% dividend. Almost 9% now, which is fine given how much we're earning and how much excess cash we have. So let's move on to TBS. Wow, here we're bringing in over 4% per quarter. 43%, and we're very capable. Lots of excess cash. And a little bit of passive investment here. Right, so NBC may go broke. And if NBC goes broke, our market share will jump by, 30... It'll jump by, not 13, it'll jump by about 14%. About 14%. So we'll want to get down to 36% of a market share. About 36. That's about where we want to be. 35, 36. So let's see who owns Canal Plus. And he's only $2 billion. So let's buy him. All right, so we want a 36% market share, and we currently have 43.2. All right, so we take the 52, 234.81 divided by 432, multiply by 36. Subtract 52, 234. And we want to give away about 9 billion. So let's spin off 81%. He's got a positive return. His projection right now is to lose money in the current quarter. But those losses are from before we gave him assets. So it could go either way. But if he's going to continue to lose money, we can always sell him off. All right, so we'll keep 19% of him, and then on these others, CNN's making money, so we'll keep it. Univision's making money, Universal Studios, we'll keep it. CBS making money, we'll keep it. So I guess we're not going to sell any of it off. We're just going to spin off the 81% that we don't want to control. All right, now let's take a look at what our growth and everything else should be. So we're growing at a -10. That's fine. We're very capable, so we'll lower our R&D to 6%. As far as the dividend goes, we're bringing in 3% per quarter. And we have a ton of cash, so let's make our dividend 8%. 8% would be $1.20. We now have 35.7, and he's done. All right, let's go to Mitsui. Mitsui has 44.5%. He's very capable, and he's bringing in, wow, 10% per quarter? Oh, that's got to be because of the oil. We just made a bunch of money on oil. Okay, we only need about... we have an extra like 120 billion here. We can disperse. Got a lot of passive investments. Let's see what the industry looks like. Okay, so us and Exelon are really the only ones making money. Puget Sound is okay, Puget Power, but he's not great. Does have good credit though. And this industry is going to be unchanged for a while. So let's sell all of them except Puget Power and Exelon. Okay, so we're bringing in 2% per quarter. We have a ton of excess cash. Let's give him an 8% dividend, which again is $1.20. -6% and -10 is fine. Right, so I guess that's it for him. Oh, do we need to downsize? So he's in bad shape. That's 3% that's in bad shape. So that would take us up to 46%. That's not a big deal. Right, so I guess it just depends on whether these others, this one and this one, go broke. But it's going to take them a while. So I'm not going to worry about it just yet. All right, gold is ready to sell. So let's go to all of our companies that have gold and sell it off. I will fast forward while I do that, and I will be right back. All right, we've sold off all of our gold, and this oil price is tempting, but it's still headed down, so we're going to wait. I also, with this interest rate way up like this, I'm hoping that this will dip down into the 40s or at least the 50s. But these prices on or the yields on our bonds are pretty good, so I want to get over to the bank and buy some more bonds. But it's really more important right now that we get these stocks, these passive investments sold off. So we're going to hold off on any bond transactions until we get through this. All right, so the only other trading that we're going to do is we're going to try to sell off what little silver we have as soon as we can. So let's go to Korean. He has a 42.5% market share. And the industry is improving ever so slightly. Of course, maybe not with these guys growing so fast. Let's take a look at our rating. We are reasonably competent, so we're going to keep spending on R&D, but we can bring it down to 8%. We are bringing in almost 3% per quarter. And we have a ton of excess cash. So this is another one where we're going to give them an 8% dividend. And as far as our passive investments, we can keep all of them except Honeywell. Except he's going broke and so is he. So maybe we need to downsize after all. Let's see. We could pick up Cadence Design. This is 45-50% that's going broke. Let's see if he's even projected to make any money. Yeah, he's projected to lose money. He's paying 19% on his loan, and he's only making 8% on his assets. So he may not go broke right away, but he is headed there. So we would have to downsize to about 20% of the market. I hate to do that, but it looks like that's what we're going to need to do. So let's pick up the other 81% of Cadence Design and give him half our assets. All right, that is not allowed because we would own too much of the industry of engineering. So we'll have to pick another one. I don't really want to get Hitachi here. He's trading at too high a premium. Let's see how much it is. He's worth 415 and selling for, okay, that's not so bad. Let's get the rest of this one then. All right, so we're going to give him 19 billion. Right, and he's making a lot of money because he doesn't have anything spent on R&D. Let's see what he's rated at. Reasonably competent. So let's give him a 6% R&D rate, and we'll give ourselves an 8%. This will probably get changed right back as soon as we sell it off. Both growing at -10, which is fine. All right, let's increase our dividend to 8%, which is going to be $1.12. And now let's sell off all these passive investments, spin off Hitachi and sell that too. All right. IBM just got dinged. Right, so we're now third on the list. We've only got 21%. We're paying out 8% in dividends. No longer control Hitachi. So if GE goes broke, we'll be safe. Of course, our income's going to go down here, but there's not much we can do, really. Let's see, how much do we have? 21.6. Got a lot of excess cash now. Let's go ahead and disperse half of this. Let's disperse 22 billion. Okay, let's go to Warner Lambert. He's bringing in, wow, almost 5% per quarter. He's very capable and has a 44.4% dividend. We have tons of excess cash. Returns here are excellent, and the industry is improving, so we can probably hang on to our passive investments as long as they're not going broke. So Clorox, Procter & Gamble, Tupperware, and Avon we want to get rid of. All right, so we want to get rid of these two. All right, and we're losing money on both of those. Let's go take a look at them. So here he's making 18% and he's got a good credit rating, and here he's making 23% and he's got a decent credit rating, not great, but it's good enough. And they're both, well, he's growing and he's downsizing. Both their stocks are trading at horrendous lows in the 70s. Let's take a look at what their earnings projections are. $1.16. He's making 4%. And 65 cents, he's making over 8%. So I think we'll hang on to him. So let's see, we're very capable, right? So our R&D is fine, our growth rate's fine, and 6%, will increase that to 8%, which will be what? $1.60. As far as who's going broke, we've got 4.5, so 5.4% is going broke. That would add 2.7 to ours for 46.9. And with him above us, we don't really have to worry about monopoly status. So let's just increase our dividend and we'll be done here. All right, Ford we've already done. So that takes us to healthcare. Columbia Healthcare. He's got 45.5%. He's bringing in 4% per quarter, and he's very capable. Has a little bit of excess cash, about $6 billion. Right, so we need to downsize. We need to make our growth rate -10. Very capable, so the R&D is fine, and we'll increase our dividend to 6%, which will be $1.20. Passive investments, we've got HMA, Tenet Healthcare, and Omnicare. All right, HMA is making money, I think. Yeah, 2% per quarter. Tenet is losing money. Where is he? Down here at the bottom. He's got too much debt, so we need to sell that one off. And Omnicare, he's making almost 2% per quarter. Right here. He doesn't have a great return, but because he has no debt, he's making money. Right? So both of these add up to less than 1%, so we don't have to worry about our market share. We're good here. So let's see what we want to make our dividend. 6 billion. Let's make it 6%. And that's what it is already. So we're finished. All right, we're running out of time, so we're just going to do a couple more. Let's do Dio. Dio has 43%. He's bringing in 3% per quarter, and he's reasonably competent. Has lots of excess cash, 12 billion in excess cash. So the demand is still positive here, but with everybody else downsizing, we have to as well. So let's take a look. Let's see, this is 8%, 15, 20, 22, 23 and a half. That's going broke here. 22 and a half, that's going broke, which means that we would need to downsize to about 36%. So we'd have to give away about, well, roughly 20% of our assets. All right, so who's small? Here in brewery. He's less than $1 billion and he's losing money. Where is he? Here he is. Let's try picking up another one. Let's look at GPMC here. He's more money, but he's in better shape. We'd have a greater chance of making our money back on him with this kind of a return. So let's buy up all the outstanding stock of GPMC. Let's consolidate it underneath us, and we'll give him 20% of our assets. And 20% is going to be 8 billion. All right, so one by one, let's see if these guys are making money. And if they're not, we'll sell them off. That's 2% per quarter. We'll keep him. He's losing money, so we'll sell it. Here in breweries, losing money, so we'll sell that. Foster's. SAB Miller, also losing money. And then Miller Brewing. He's breaking even, but I don't think he's making enough. Let's see. 15% he's paying on his debt, and he's only making 13. So let's sell that one too. All right, so we've got 3% per quarter we're bringing in, lots of excess cash. Are we very capable? Nope, we're reasonably competent. But we're spending more on R&D than anybody else, so that should be fine. -10 is fine. And we can increase our dividend to 8%, which would be 80 cents. Okay. That may not even dent this, given how much we're bringing in. Let's see, what's our market share now? 34.5. All right, let's do Lucky Gold Star and then we'll call it a day. Here we're bringing in 2.5% per quarter. We're very capable and have 47.7% of a market share, and we have lots of excess cash. And these two guys are going broke. Do we own stock of them? No, thank goodness. All right, so this one we own stock of. And the situation's getting worse rather than better. And he's trading really low right now. And we don't have to worry about becoming a monopoly if these guys go broke, because he has a larger market share than we do. So all we need to worry about really is the dividend. And we have enough cash and income to pump it up to 8%, which would be $1.68. Yep, 8.0. All right, so he's done. We've already done Mallinckrodt, and we are out of time. So when we come back next time, we'll work the rest of this list. I don't know that we'll get all the way to the bottom, but hopefully we will. And then we'll buy some bonds. Matter of fact, we've got a couple of minutes. Let's go ahead and buy some more bonds here. This interest rate has been falling, and before it goes any further, let's buy some bonds. All right, here's our defaults. That's 2. Okay, that's 8 of them, 8 defaults. All right, here's Takuma up for sale, but we don't care about that one. We want him to put the other one up for sale. What was it? Waste Management. All right, here's the earnings report for Bank of RakeM. 1.4 trillion for the quarter. Didn't have any losses this time. Made 72 billion on swaps. And we increased our reserve by over 80 billion, which is interesting to me because that's like 10% of our overall business loan portfolio. But it does put some loan loss bad debt reserve in there for what you're holding and everywhere else. And because we have 93 trillion in mortgages, it will go ahead and increase that. So anyway, we have 15 trillion in cash again. Let's put 8 trillion of that into mortgages, and then we'll call this an episode. We'll buy some more bonds or do something else with that cash next time. I just lost count. All right. He's projected to make 73 cents, which is a nice increase despite this high interest rate. All right, so that's it for today. Thank you for joining me. I hope you enjoyed it. If you did, please like and share. And until next time, this is RakeM saying, have a good one.